Welcome back to Dividend Obsession. I recently started a series on my channel called Dividend Discussion that's going to allow other dividend investors to tell their story. One of the goals of this series is to allow each of us to grow through the experiences and lessons of others to make us all better dividend investors. Now, if you're watching this video, this is just a short clip from the full interview, so if you enjoy it, make sure you click on the link at the end of this video for the full interview. So the next thing I want to ask you is what keeps you going in your dividend journey?
What keeps me going personally, two things. One, the fact that I am pretty darn sure I'm on the right path. And it's going to be a slow boat, but I know that if I can keep focused and buying stocks that have been growing their dividend over the last 10 years, and as long as I keep an eye on them to make sure they're still growing, those are the ones that I'm going to continue to invest new capital into. That eventually I will get to the point where I can make that transition. Okay. Right now I'm focused on total growth. What my goal is when I hit 59.5 and my Roth IRA becomes mine entirely, then I will switch from total growth to what I call healthy income. And that's where I focus a little bit more on the higher yield. And what I call higher yield is like 4%. Okay, it's not the 10 percenters. It's an average of around 4% over the last 4 years. Those are the stocks that I want to start focusing my new capital into. It doesn't mean that I'm going to sell anything that I own, that I bought during my total growth phase, because yield on cost for those might at that point be the 4% that I want. And that would be fantastic. But I'll start putting more capital into healthy growth or healthy income with that 4% yield, and then build that revenue stream up to where it equals my paycheck. And when my average dividend revenue for a year equals my paycheck for a year, I'm done. I can retire.
Yep. Okay, so I've had this conversation recently with probably more people than wanted to hear it. I'm often like that. I'm really excited about dividends, so I just tell anybody that's got ears. So my thing is, I think one of the biggest things that keeps you going is the same thing that keeps me going, is the fact that you're tracking it, and because you're tracking it, you can see the progress. I know a lot of people that get into dividends and they have zero ways to track their progress. Then you're just like, yeah, I'm, putting money in. And it was almost like your friend that you had where you were tracking that you were making more and more money, but you weren't tracking the whole picture. And then when that's a really good friend, by the way. But when that friend was like, hey, there's a full picture to this. You can be really zoomed in, or you can actually zoom out and see the whole thing. The tracking really, really helps that. So what I've been contemplating in my head, for anybody that's been to the channel or watched my monthly recaps, I'm 28. My goal is to retire at 50. My thing I think I'm going to have an issue with is the magic of compounding. So I know that when I get to 50 years old, my portfolio, I don't know, let's just say it'll generate $60,000 in passive income. That's at 22 years of investing, like 22 years from now. I feel like I'm going to look at it and I'm going to be like, okay, I'm 50 right now. I'm generating $60,000 in passive income. If I wait till I'm 51, I'm going to generate $68,000 in passive income.
There we go.
And if I wait till I'm 52, it's going to be 80,000. Yeah.
Right.
Yeah. So like
at that point, and let me show you what you're talking about.
Yes.
Okay. Because I have a chart that will show you exactly what you're talking about. Okay.
And so the charts are always super fun for me to look at. The thing I know, because I am how I am, the thing I know is going to be difficult is my goal is 50, but I also like money. So I'm like, okay, if I stay 2 more years, just 2 more years, I can like add $16,000 a year to my passive income. And like, when do I know it's time to just get out of there? Like, when do I actually say I'm done? I'm okay with this amount. And it, like, the other thing is, what you're probably going to expand on is like, say I'm going to make $60,000 in passive income. I might not need $60,000 to live because my goal is always to reduce my expenses. So I can still, at that point, still invest. Say I'm making 60 and I only need 40. I can still put 20,000 that year into my portfolio.
Mhm.
So I know that's going to
So
be an issue for me. I know it.
so here's the chart that also keeps me going. Okay, which is exactly what you're talking about. All right, you can see this is an extension. This is an extended dividend projection based on the data that I've been bringing in. And if I can keep growing at the rate that I'm going now, you can see the first 10 years, it was pretty much nothing. And then it grew like crazy for 10 years. You can see the 90% drop. This is exactly what we saw over here. But then using math, you can see, okay, then keeping this dividend growth rate, what will happen? So at about 2029, it's going to equal what I had in 2020. And then it's going to start going up faster and faster and faster. And this is what you're talking about when it's like, can you wait one more year? Can you wait 2 more years? Because the longer you leave it alone and let it compound, the faster it goes up.
Yep. Yeah, and I don't. So like that's gonna be your thing. Like you're gonna be like, okay, well I know this replaces my paycheck, but if I waited 6 more months, I could get it to be my paycheck and a half.
Yeah.
So I don't know. I think that's gonna be something that a lot of people have, and like best case scenario, you get to a certain point where you're old enough, the house is paid for, cars are paid for, everybody's out of the house. It's you're just hanging out, and eventually enough is enough, right? You don't like I don't know, tell that to Jeff Bezos or Elon Musk, but so I don't know. I know that's one
Well,
thing I'm gonna have an
I
issue with.
I do sort of have a plan for that, and that is if I can get it to 110%. Okay, that means, and actually think about it this way: we are saving a lot out of our paychecks to go into investing right now. Let's say it's 10, 20%. With somebody as insanely obsessed about dividends as you are, maybe it's 30 or 40%. I don't know. But you're already putting 10% into investments. So when you reach the point where your dividend revenue equals your paycheck, that includes the amount of money that you're going to be investing. So you keep investing. And the easiest way to do that is to leave some of your stocks on drip. Okay, so it continues to compound, and you can switch out which ones those are as time goes on, so you don't get too heavy into any one of them or any one stock, or too heavy into any one sector, just like we do with regular diverse investing, which I think is one of your questions. But if we can keep that focus, then even when our expenses are paid out of that revenue stream, we still have the extra revenue that is going to build more assets, that is going to buy additional assets that build our revenue stream even faster forever.
It when I explain it to people, for example, I just had a conversation with a kid that I talk to in the gym often. I was finishing up my workout. He asked me a question. We got talking about dividends because he has ears and I like to talk. So I was telling him, and like as I explain it to people, the whole method of the drip and the compounding, it almost sounds like a scam. You're like, okay, I'm gonna hold this company. They're gonna pay me money. I'm going to turn around and put that money back in the company, and they're going to pay me more money that I'm going to put back in the company to give me more money. And you're just like, okay, like that seems a little something. Like, do you also sell me Bitcoin or something? But so
let me try this. Let me try a metaphor for you.
Okay.
That will work in a gym.
Okay.
Okay.
I'm ready.
You're building muscle
Yes.
when you're pumping iron.
Correct.
Okay. The more muscle you build, the more iron you can pump.
There you go. That is true.
That's the metaphor.
But in dividend worlds, I don't have to worry about my back hurting. So,
no, you don't have to worry about the fundamentals of the economy.
Yeah.
You don't have to worry. Yeah. Yes, you do.
You
have to pay attention to it.
Yeah, you do need to pay attention to it. A lot of it is I found now people in the channel know that I like to keep my investing style simple. That not to say that looking at all these different metrics that everybody else seems to know a lot better than I do is wrong. I think it's right, especially if you understand it. I was just under the impression of I get informational paralysis too often, where I look up too many things and then don't make any moves because I know too many things, or I think I know too many things. So in lieu of that, I was like, what questions can I ask myself to, like, basically what criteria can I set for myself that one, I can understand, and two, will help me find quality stocks. And I have videos on the channel that talk about that. And it's just one of those things where you have to find. I feel like if you do a good job of screening these stocks and they pass 1, 2, 3, 4, 5, however many checks you have, that's almost your thing to like not worry about the FOMO, not worry about what all these people are saying. Oh, this stock's gonna be junk, whatever. As long as you trust your due diligence that you did on your stocks, it could be just a buying opportunity. Just because a stock goes down 5-10% doesn't mean it's the wheels are falling off and it's a garbage company. Because for a long time, when I was doing my market recaps at the end of the month, Microsoft was my biggest loser. And then Microsoft in one day went up like 8 or 10%, and now it's one of my biggest winners. And like I kept saying, you guys can check the tape. I kept saying Microsoft, because I always get my top 3 and my bottom 3. I always said, yep, down here's Microsoft. Guess what? I'm not worried about it. I don't know if you guys know, but Microsoft's not going anywhere. Microsoft is one of the strongest companies in the world. I wasn't worried about, like, it was just bad timing for me. When I bought them, they were down. But if somebody bought them 20 years ago, they were up a bunch. So it was one of those things, like, just keep dollar cost averaging. Eventually, it's going to do its thing, and here we are. I really hope you all enjoyed that clip. Please make sure you guys leave a like on the video as it helps me grow my channel. And don't forget to subscribe for dividend-related content and other interviews. If you're interested in being added to the interview list, send me an email at dividendobsession@gmail.com, and I'll be in touch. Again, this was just a short clip of the full interview. If you're interested in the full interview, check that out right here. But until next time, see ya.